gentlemen, thank you for standing by and welcome to the Q3 results announcement. At this time, all participants will be in a listen-only mode. There'll be a presentation followed by a question and answer session, at which time, if you do wish to queue for a question, you need to press 0 followed by 1 on your telephone. Please also note this conference is being recorded today, Friday, the 6th of May, 2016. I'd now like to hand the conference over to your host today, Mr. Bill Morrow. Thank you. Please go ahead.
Thank you, operator, and good morning, everybody. We'd like to thank you as well for taking the time to join our results call for the quarter ending 31 March. These quarterly updates are an important part of the company's commitment to transparency, and as a reminder, we conduct face-to-face sessions for the half and full year results and 2 calls in between, such as this one. Materials have been uploaded to our website at nbn.com.au/financials, and that includes our press release, our unaudited primary financial statements for the 9 months to 31 March 2016, and a PowerPoint presentation. Joining me on the call is our CFO, Rue, and after we present the third quarter results, we'll take whatever questions that you may have. So without further ado, I'm thrilled to announce the team's focus, hard work, and determination has delivered another successful quarter. In fact, it's our 8th successful quarter in a row. Virtually every key objective we have in our plan is either on or ahead of target. Over the last 2 years, we have aligned the organization around meeting current objectives and at the same time driving initiatives that enable the company to scale so we can continue to double the volumes year after year, and the results are coming through. During this past quarter, the company passed the 2 million milestone for premises ready for service. This is a significant milestone and a clear demonstration of how the team is hitting its stride. Building a far-reaching quality network at pace is a key enabler to ensure we meet our commitments, but it's the volume of active end users that will be the catalyst for our digital revolution and the key to providing a return on taxpayer dollars. On this front, I'm excited to report NBN is ahead of plan on activations connecting a record number of end users this quarter. By the end of the quarter, we had surpassed the 900,000 active end users, and since then, we have even passed our full year target and are weeks away from hitting our 1 millionth home actively using NBN's fast broadband network. In addition to hitting our operational targets during the quarter, the team has delivered on a number of significant milestones that will ensure that success continues, and I'll speak of these in more detail after Stephen presents the financial and operational results for the quarter. Stephen, please.
Thank you, Bill. Good morning, everyone. Once again, I'm delighted to provide you with an overview of our key financial and operating metrics for the quarter and period ended 31 March 2016. As Bill has just said, just like previous quarterly results announcements, we've prepared a financial results presentation and placed this on our website, together with unaudited primary financial statements. I would like to talk to our presentation, which summarizes the key highlights of the company for the quarter. The headline results for the 9 months ended 31 March 2016 shows our strong progress and momentum continuing into the third quarter. As Bill outlined, we are delivering against our targets, and the headline results reflect this. Firstly, total revenue for the 9 months more than doubled compared to the same period last year to 275 million. The growth in revenue is due to both a 132% increase in active premises, which surpassed 900,000 at the end of March, as well as an approximate 10% improvement in ARPU from the comparative period, growing to $43. Our technology rollout continues to increase exponentially, over 2 million premises ready for service at the end of March. This represents more than double the number of premises ready for service compared to the same time 1 year ago. Or put another way, we have made more premises ready for service in the last 12 months than from the period of the startup of NBN in 2009 to March 2015. This represents significant progress and momentum. The continued acceleration of the network rollout has resulted in 3.4 billion of capital expenditure being spent during the 9 months, bringing total life-to-date capex to over 12 billion, with expenditure continuing to reflect investment in the network, primarily in the design and build of our FTTP, FTTN and HFC networks, as well as the continued investment in IT systems, to help support the business and our customers. During the 9 months to March 16, NBN received a total of $4.9 billion of equity from the Commonwealth Government, taking total equity funding to date to $18.1 billion out of an aggregate government commitment of $29.5 billion. Now turning to revenue in more detail. You can see in the chart the growth in revenue quarter on quarter over the past 12 months. It is good to see our revenue growth continue, with quarterly revenue up $20 million from the second quarter of fiscal 16 to $111 million for the third quarter. This brings total revenue for the 9 months of the 2016 financial year to $275 million, representing a 155% increase in the corresponding prior period. As I previously mentioned, this growth in revenue is mainly driven by the higher number of active users and the growth in ARPU, which I will talk to on the following slide. The numbers on the right-hand side of the chart provide a breakdown of revenue by technology. We are very pleased to see the start of FTTN revenue coming through and the continued growth in FTTP, fixed wireless and CVC revenue. On the next slide, we can see the progress made in activating end users onto our various networks. We are very pleased that we have continued our momentum in activations during the March 16 quarter. As Bill mentioned, we surpassed the 900,000 mark for active end users at the end of March. This represents an increase of more than 415,000 premises activated in the past 9 months. FTTP active users have grown to more than 725,000 at the end of March 2016, and following the launch of FTTN services, active users totaled over 43,000 on FTTN. At the end of the third quarter, we had more than 99,000 fixed wireless users connected to an active service, or nearly triple those activated at the same time only 1 year ago. On the interim satellite service, the number of premises activated has again shown a small decline during the period, and we are looking forward to retiring this service in due course and replacing it with a greatly enhanced satellite service from our purpose-built satellite Sky Muster. Moving on to ARPU. The 9-month weighted average ARPU across all technologies was $43, which is up from $40 in the comparative period. This growth in ARPU reflects a more than 56% increase in data consumption during the period. AVC ARPU was $30 and CVC ARPU $13. Now regarding speed tiers. On this slide, you can see the mix of fibre and wireless speed tiers. At 31 March 2016, we saw 33% of fixed line users on the 12.1 speed tier, 47% on the 25.5 tier, and 15% on the 140 tier. You can see the continued trend from end users towards the 25.5 speed tier. In fixed wireless, 83% of customers are now on the 25.5 tier. So on the next slide, turning to premises ready for service, you can see the significant momentum I outlined in my opening remarks. At 31 March, there were more than 2 million premises ready for service, or a growth of 338,000 premises in this quarter alone. In relation to the FTTN network, more than 303,000 premises were ready for service at the end of March 2016, representing an increase of 180,000 FTTN premises in the past quarter. And while ready for service is naturally the most important metric, if you include the satellite service, at 31 March, nearly 6 million premises were in or had completed the design stage, reflecting more than half of all premises in Australia. Now turning to capital expenditure. During the 9 months to 31 March 16, NBN incurred $3.4 billion in capital expenditure, or an increase of $1.1 billion on the comparative period. The largest area of growth in CapEx during the 9 months is the FTTN network. A total of $1.1 billion in CapEx was incurred for the design and construction-related activities in the rollout of this technology. In addition, $277 million was incurred on the development of the HFC network, primarily related to upgrading DOCSIS technology, as well as design and construction activities prior to the launch of the HFC network, planned for later in this fiscal year. We have continued CapEx on the FTTP network, with $864 million incurred during the 9 months, including spend of $742 million on brownfield premises and $122 million on greenfield premises. Capital expenditure on the fixed wireless network of $262 million reflects the acquisition of a further 261 wireless sites and the integration of 281 base stations over the past 9 months. The satellite CapEx of $126 million primarily relates to payments for the build of the 2 purpose-built satellites and the launch of Sky Muster. CapEx on the transit network continues as both end-user numbers and the demand for capacity grows. And finally, common CapEx was $515 million during the 9 months and is primarily related to our IT spend on developing our FTTN and HFC network platforms to support the launch of commercial services for these technologies, as well as spend on business support systems, data centers, and the National Test Facility. Moving to the next slide, you can see the total cost of our property, plant and equipment and intangible assets before depreciation as at 31 March 16, as shown in the financial statements. The life-to-date amount of $17.1 billion includes the net present value of right-of-use licenses, which are accounted for as finance lease assets within our financial statements. On the right-hand side, you can see the breakdown of the $17.1 billion spend, and in particular, you can see the evolving spend on FTTN and HFC. And now to cost per premises, otherwise known as CPP. And to recap once again, costs incurred in CPP are those incurred in building the network from the transit network to the in-premise activation. At 31 March 16, NBN's life-to-date cost per premises was $4,403 for FTTP brownfields, $3,479 for fixed wireless, $2,713 for FTTP greenfields, and $2,275 for FTTN. Brownfield CPP has increased marginally during the 9 months to $4,403, but has stabilized around that number. Fixed wireless CPP has decreased 3% during the 9 months to $3,479 due to a higher number of premises serviced per wireless base station. Greenfield CPP has decreased 3% during the 9 months to $2,713, primarily driven by additional premises connecting to temporary transit infrastructure, thereby reducing the CPP. Finally, FTTN CPP is slightly below our corporate plan target of 2,300. We are still in the early stages of this program, and cost per geographical location can vary. However, to date, the CPPs are encouraging. And so briefly to operating expenditure. For the 9 months ended 31 March, operating expenses were $1.3 billion, compared with $893 million during the comparative period. The increase is in line with the expansion of the network and the growth of the underlying business. And consistent with prior periods, the biggest increase in costs in the telecom and network expense line relates to the cost of disconnecting and migrating customers from the Telstra and Optus networks, as well as the operating cost of the expanding network. Our growing business also requires more employees, which is reflected through an increase in employee expenses. The growth in other expenses mainly relates to increased IT support and maintenance costs, as well as additional marketing and communication costs associated with educating end users on the benefits and availability of NBN, as well as increases in administration costs associated with business and employee growth. Turning to the financial summary slide, for your benefit, we provided a summary of our financial measures and the growth rates for both the quarter and 9-month period ended 31 March 16. So with that, I'd like to hand you back over to Bill to provide more colour on our operating progress and momentum towards our full-year targets.
Thanks, Stephen. So I hope you can see that the evidence is clear. There is strong momentum behind the business, and we're delivering according to the corporate plan. This momentum is only possible because the team is united behind a clear goal with the skills and experience necessary to deliver on such an ambitious undertaking. We have spent a lot of time and energy creating a culture where we are delivering on results that matter, and one of the key measures of this culture is an employee engagement score. We conduct an annual review by an external source every year, and I'm pleased to report that this year's survey was completed just weeks ago, and the results show our team engagement rate at 68%, which is up 17 points or 33% from a year ago, and up 24 points or 55% from 2014. This now puts us in the top quartile of businesses across Australia and New Zealand. So with a highly engaged team of people at NBN and the much improved collaborative relationships that we have with our equipment suppliers, delivery partners, and service providers, we are able to advance the company across each of our key initiatives. Now, relative to our network, we continue to leverage technology enhancements, process improvements, and partnership agreements. Enhanced antenna optimization on our fixed wireless network allows us to offer up to 50 megabits per second service and extend the service range, which increases the number of homes that can be served by a tower. We're fast approaching 400,000 homes that can order NBN and have already activated more than 100,000 of these. These end users continue to positively rank this service with a very high customer satisfaction rating. Relative to our other wireless access technology, last week we announced the product launch of our Sky Muster satellite service. This is a game-changing milestone for those in rural and remote Australia and will offer a new level of high-speed service never before offered in these areas. This offering is one of the most advanced available across the globe. Many end users have pre-registered their interest with their provider of choice, and we've already begun deploying our activation partners who have a big task ahead in covering so much territory across our enormous country. Moving to our fixed line footprint, the fiber to the node network is reaching into new areas every month, and we are pleased to confirm that we have finalized agreements with power utilities in all states for the access to infrastructure and the supply of power for nodes. And as with the introduction of any new technology, we have experienced a small number of teething problems, but we are learning quickly, and we continue to work with our retailers to ensure capacity levels are managed and processes are refined as thousands of people are connected every week, a pace which we find very encouraging. Today, we have nearly 350,000 fiber to the node homes ready for service with more than 60,000 active end users. And turning to HFC, we are on track for the product launch at the end of next month. Redcliffe, Queensland will be the first area to go live, starting with more than 10,000 premises and scaling from there. In April, we signed the design and construction management contract with Telstra and are already seeing the benefits of doing such. Construction began early in Ocean Reef, WA, and Unley, SA, which allows them to follow the initial launch in Redcliffe. The use of skinny fiber will help lower the cost and accelerate the deployment of fiber and can be used for new developments, FTTP brownfields, and FTTDP applications. And as you heard from Stephen, the acceleration of the build and activations has also led to greater than planned revenues. Part of this is due to the higher than anticipated data consumption once connected to the NBN network. In March of this year, the average download per month on an NBN service was 114 gigabytes, an increase of 56% from the 73 gigabytes a year earlier. Now, this growth coincides with the uptake of video streaming services. In fact, the statistics show people on the NBN consume approximately one-third more data than the ABS national average per month. Now, while I'm on this topic of comparing the prevalent ADSL technology-based services to those we use with NBN, I'd like to clear up some misconceptions about why Australia has fallen on the Akamai speed rating. Some have claimed the technology behind NBN is why the country has moved down the ladder, but this couldn't be further from the truth. Akamai uses data embedded in IPv6 to gather observed speeds across all of the fixed-line broadband services in Australia. Now, this base is across nearly 7 million premises, with the large majority using existing ADSL technology. Less than 10% of the entire sample is thought to be NBN services, and we must also remember that 80% of NBN services are chosen retail speeds far less than what the network is capable of. Now, if the network is built according to our current plan, nearly half the nation will be connected with technology that can reach gigabit per second speeds, and the majority of the other half can reach 50 megabits per second or better. Very few countries will be able to beat this when we get this bill done. Now, we know that this is more than building a high-speed network that can meet the demands of today and tomorrow. We must enable a retail marketplace that brings innovation, consumer choice, and affordability. To achieve this, we work closely with our retail providers. In this past quarter, we introduced the first step in evolving our wholesale pricing model for our CVC charge. The new dimension-based discount model will lower the unit price as volume increases, thereby encouraging higher consumption. From the 1st of June, we will apply the discount model based on the industry average of CVC per end user, and the more industry provisions per end user, the bigger the discount from NBN. And based on current averages of CVC provisioning, the unit price will drop from $17.50 to $15.75 again at the 1st of June when this is implemented. We know that the CVC capacity chosen by our RSPs is a key component in the end user experience, and our aim is to encourage and reward greater provisioning. This will create value for all and encourage the best possible experience of the NBN network. We will take the next step to have a model that provides a discount based on the retailer's average CVC per end user instead of the industry average. But this takes a little longer to implement, and the two-step process ensures an initial discount as soon as possible. And we will continue to consult with our retailers on how this may be further improved. So as you can see, we have delivered consistently for 8 quarters in a row and have hit our scaling milestones that give us the confidence that we will deliver what our plan calls for. To give you further evidence of us being well on track for this financial year, I draw your attention to the final slide of the presentation. Here you will see there is excellent progress for our first 3 quarters and real momentum as we near June 30. Following the commercial launch of the SkyMuster satellite services, our RFS metric increased to more than 2.45 million premises this week. Our average weekly run rate gives us confidence that our corporate plan target of 2.6 million premises RFS by the end of June is well within reach. And as noted, we are headed quickly towards 1 million services activated on NBN, having already exceeded the end-of-year target of 955,000. This, together with the growth we have seen in ARPU, means we will exceed our full-year revenue target. And lastly, in relation to capital expenditure, we are tracking in line with the corporate plan expectations, including within the funding envelope anticipated at the end of 2016. So bottom line, the team is energized by the results to date and ready for the challenges ahead, which are not to be taken lightly. We have been open about the risks facing the company. We know these risks, we have strategies in place to mitigate them, and we have a great partnership across our industry to help us execute on the task at hand. So we'd now like to take any questions, and operator, I'll turn this back over to you, please.
Thank you. And as a reminder to our audience, if you do wish to ask a question, you need to press 0 followed by 1 and wait for your name to be announced. Once again, that's 0 followed by 1. And your first question will come from the line of Max Mason from Fairfax Media. Please go ahead.
Hi guys, how's it going?
Good, Max. How are you?
Getting there. It's almost weekend. I just had a quick question around, I guess, with an election to be called imminently, can you provide some color around how you're working towards, planning the next little while when, the next time we do this results call, you could potentially have a new boss, and that it's unclear about what kind of rollout Labor would like to do if it got power again.
Yeah, Max, thanks. We've been briefed. I mean, most of the senior guys, I think about half of us have not been through an election like this and the caretaker period that you go through. So the Department of Communications has been working very closely with us to educate us and give us all of the rules that we have to operate during that period. I don't see any change for the company. It is business as usual. That's what we're allowed to go forward on. It would be ridiculous for us to try to anticipate if there is a government change. What would that look like? What do we need to prepare for? We'll decide that on July 2nd or July 3rd, whenever the results are, if that's when the election element occurs. And we'll be standing by, ready to make any changes if there is a change in the policy. And so we're not going to worry about that. We've got a lot going on right now. Like you can see from the momentum we have, this is clearly our focus.
And you mentioned that you're going to exceed your full-year revenue target, and you're getting more people picking up services than you're forecasting. Are you going to be changing any forecasts soon in terms of how many people you're expecting to connect and how much revenue you're expecting to bring in? As obviously as the rollout picks up and more and more people connect, I think it was something like 5.6 million you're expecting by about this year RFS.
So in relation to the forecast of the active end users, Max, we're undergoing the whole planning process right now, and so when we get to the end of this process step and we submit to the government, get all of that approved. If there is a change to what we've already previously forecasted in the corporate plan, then obviously that will be updated. I think it's just good news across the board when we look at us hitting and or beating every target. That's going to allow us to give us more confidence about what the future calls for.
Okay, thank you.
And your next question will come from the line of Supratim Havaki from The Australian. Please go ahead.
Good morning, gentlemen.
Hi, Supratim. How are you?
I'm good, thank you. Now, a couple of questions, if I may. Just to confirm, Bill, what you said earlier, so you are about to click on the 1 millionth active premise on the network by the end of this month. Is that correct?
Well, we can't ever be certain about the prediction of that, but we are within weeks from hitting that target.
Okay. Now, with regards to active premises, would it be fair to say that the bulk of this these numbers are coming from the FTTP footprint? So would it be fair to say that the hard work really begins now, given that FTTN and HFC will now have to do most of the heavy lifting with regards to the future numbers?
Super Tim, you know what? Hard work began a long time ago, and there's been an enormous amount of effort to get this far. So that would be completely unfair to say that it's only starting now. The reality is when you look at effort required to get FTTP going, to get the fixed wireless going, to get everything prepared to launch the FTTB and the FTTN as we have, even the long-term satellite, all of that, of course, is work that leads up to the way it is today. I don't see anything different in the business plan going forward. We have experience, as I mentioned, with nearly 400,000 homes on RFS on FTTN. There's not anything that threatens the business plan or the business as usual components behind this. So the technology is not going to shift or change anything that we're doing today.
Mm-hmm. Now, there was some reporting post-budget announcement that NBN is running out of money. That what's your view on that? I mean, the last tranche of the funding envelope that was given by the government is going to flow in very soon. Are you confident that you're on track with regards to whatever funding needs you may have in the future?
It's Stephen here. I might answer that. The arrangements we have with the government is the government equity is capped at $29.5 billion. If you look at last year's corporate plan, that it indicates that we will utilise that equity by around about June next year, which means that on a $49 billion funding or total peak cash that we need, we'll need to borrow around about $19.5 billion. So obviously that's work that we'll be conducting in the next 12 months. We're confident we can borrow that money. Our model our model really is that over time our capital expenditure reduces, the payments to Telstra and Optus reduce, and obviously our revenue significantly grows. And because of that, we have very positive cash flows in the future. So we're confident that we can borrow that money. That's money that that's work that we'll be conducting in the next 12 months.
Now, Stephen, does that require? I mean, is that purely based on the key determinant to that? Obviously, will be the state of the rollout, right? So, any sort of slowdown in the rollout, does that hurt your modeling with regards to whether you're able to borrow that money or not?
Well, I think as you can see, there is no slowdown in the rollout. In fact, quite the opposite. And there's really no update in this quarter from what we've updated before on the debt situation. We clearly, with the momentum in the business and the growth in revenue and the growth in premises, both ready for service and activated, we're very, very confident.
Thank you.
And once again, if you wish to ask a question, you'll need to press 0 followed by 1 and wait for your name to be announced. Your next question will come from the line of Petrock Wilton from Combay. Please go ahead.
Hi, Bill. Hi, Stephen.
Hey, Petrock.
I'd like to talk about FTTBP for a second. Do I understand correctly from estimates last night that you see the trials going for another 6 months, and then with evaluation after that, the earliest deployment would be late 2017 into 2018?
That is correct. So this is a bit of normal process given where that technology is in the maturity curve. As we've said before, we're quite intrigued by this technology. We want to start the process to integrate it into our company, into the RSPs, and of course look at the deployment opportunities. But the realization is that for it to hit any kind of serious numbers, it's going to be late calendar year 2017.
Yeah. And did I also hear a figure that you'd be looking at a commercial rollout in the first instance for around 300,000 premises?
Yeah, just to be clear on that. So there's what we call them candidates, right? So you can look at if we can roll it out with the speed we think that is behind the early indicators of skinny fiber and the use of this technology, and with the cost modeling that we've done to date, then we see where it would replace about 300,000 homes that are currently looking at with FTTN and a little bit with the fixed wireless. And that would have to all be proved out, of course, and again, depending on when that technology hits that full maturity curve as to whether that window of opportunity is still there.
Okay, because if you're talking early 2018 and that smaller quantum of premises, wouldn't there be a question of whether FTTBP was even kind of worth building into the rollout? I mean, by that point, you'd expect to have your FTTN footprint well advanced, FTTP and HFC as well, right?
Well, you're right. There is an element about the window of opportunity for this technology, but let's remember again, we still have to build out another 3/4 of the nation. From July of next year, will only be 1 in 4 homes complete. So there is still a lot of work to be done to where this technology can be used. I don't want to second guess how many that would be or what the volume would look like. If we hold it according to the schedule, that's the opportunity that we see today, sticking with our mandate of the fastest and cheapest way to roll out NBN to everybody.
Okay, so without wanting to steer you guys at what's going to be a politically sensitive time, if either side of politics comes out with a broadband election policy that promises, let's say, a certain measure of FTTBP in the network, would that be premature at this stage?
I don't know what the governments are going to do in terms of the policy, and I fear making any sort of speculation, Petrock. So if they give us any sort of mandate one way or another from any of the sides of government, then we'll tackle that when we see it.
Fair enough. The other question was around NBN's commercial model. Bill, you spoke a bit around the CVC changes already. There does seem to be an increasing discussion on the industry side about, one, whether the quantum of revenues that NBN will need to extract full stop, whether that's CDC, ABC, or a blend of the two, will become difficult, especially in a shrinking market, compounded by potential, let's call them NBN bypass services, last mile alternatives like TPG's FTTP, potentially even 4G, 4.5G, and maybe even 5G services. I'm sure you've been listening to that commentary. Are you confident that NBN's commercial model at its heart remains sound in terms of delivering the return on investment?
I am, but with the caveat is no one can predict the future, right? I mean, so many different things could happen. But any of the signposts that we see today, any of the trends that we observe out there, we do a very thorough analysis of our SWOT, the strengths, weakness, opportunities, and threats. We've taken into account what TPG is doing in terms of their own infrastructure rollout. We've taken into account what other wireless technologies are going to come about, and therefore we have confidence within the plan that we have put together. Every year we go through this cycle to make sure that any new information that is available is factored into this. We're going through that process right now. I am hoping that there's no changes to it, but I would be remiss if I tried to preempt that process. But right now we're comfortable. Petrock.
Thanks very much, Bill.
And at this stage, there are no further questions in queue.
All right. Well, listen, we would like to all thank you for the call. Again, I hope you can see the progress, the momentum that's picking up. We still have issues, of course, naturally to work out, which we are, and we take the end-user experience on this very serious, and you'll continue to hear updates from us. Thank you.
Ladies and gentlemen, that does conclude our call for today. Thank you all for participating. You may now disconnect.